Welcome to readtheticker.com. Today we're going to talk about Richard Wyckoff's second law, that is cause and effect. Richard Wyckoff stated in his course material, "When I was doing my best work, I discarded everything but point and figure charts of about 150 leading stocks." And he later stated, "Figure charts are more valuable than bar charts." Richard Wyckoff in the 1920s was the editor of a stock market letter called the Magazine of Wall Street, in excess of 200,000 subscribers. At time his letter moved the market. The law of cause and effect. In order for there to be an effect, there needs to be a cause. The effect will be directly proportional to the cause. Best price moves occur when there has been enough time to allow for a period of accumulation or distribution, or in other words, a cause. So a cause and effect is good for your bank account. A good build-up of a cause means there's going to be a decent move, either up or down. For example, here's XRT, the retail ETF. We have a sideways cause for a year, and then we have a markup process where prices accelerate. A cause is a period of accumulation where large players accumulate stock float to mark up to sell at higher prices. Another example, the transports. A perfect cause of horizontal movement. We don't use the word sideways consolidation because basically we use it as a cause because people are accumulating stock float to mark up prices to sell at a higher level. That's the effect. A cause can be distribution. For example, the sideways movement up here. And obviously the effect can be the marked out process. So now, as you can see here, you get up thrust, signs of weakness, last point of supply, first time over the ice, marked down. Wyckoff too, we use Gann angles to measure the speed of the markdown. Wyckoff used channels. Same for accumulation. We're looking for a selling climax, automatic rally, sign of strength, a test or a spring, then a markup process that starts with a jump across the creek, a pullback of light volume, so that more signs of strength, markup. So phase C, D, and E are very tradable, and we use Gann angles up the side here to measure the speed of the acceleration. But if you find an attractive cause, we want to analyze the cause for what's inside it, selling climaxes, signs of strengths, and the volume and price wave analysis. Obviously, continuation patterns have a similar interest of a minor causes, and obviously we have Gann angles going up the side and down to measure the speed of the move. In readtheticker.com, we have a special page for our cause and effect charts. Because they're very important when you're reviewing a portfolio or basket of stocks, you want to know if your stock or your index has a cause waiting for an effect to take over. For example, I have a group here called Introduction. Select Cause and Effect. It brings up my cause and effect chart. Okay, this is the SPY. As you can see here, we have a nice sideways movement. And we're getting the effect right now. Also we see, for example, we had a bit of a selling climax here. A jump across the creek here. This is our test. A nice little spring or a test here. Of course, the sign of strength, just move up here. And more importantly, as you can see down below, the net up and down volume per bar. So this is a point and figure bar. And within that, there might be 10 days, 5 days, or 3 days. What we do is we add up the up and down volume. So if the volume is up for 5 days, we add it up. And we might have 4 days up and 1 day down. We add it up. As you can see on the sign of strength, we have a lot of blue bars dominating sign of strength. And it's only now we're getting red bars dominate. So you would think distribution is going on. So this is our immediate cause and effect chart. We have the bar chart here. Well, I should point and figure chart, and we have a weekly bar chart here with volume waves and some basic indicators. So you can sort of eyeball one to the other, and as you can see here, we've got this nice little consolidation pattern here. It doesn't really sort of show up in the weekly chart because of the high-low range, because this just closes. Here, the point and figure chart is much better for showing cause and effect patterns. Now, the size of this chart can be determined in my defaults. Let's go down to cause and effect. Number of symbols per page, I've got 50. I've checked my width to 1200 pixels, and I've got a height of 750. So if your screen is larger or smaller, you can make it to suit. Example, we'll go to something world stock markets, cause and effect. Okay, we're loading up the world stock markets, or a selection of. As you can see down here, I've got only got 3 charts, so this one's not fun. Okay, well, obviously we could load 50 if you wanted. So if you're looking at 50 or 100 stocks, you'll see page of 50 at one time, so you'll be able to scroll between 50, 50, 50. Here we have all odds, and this button up here, we can select that, and we'll get a pop out to our swing chart format, custom format. The gremlins are slow today. Okay, so here's our custom pop out from our swing chart setup, and we can get a closer review of what's going on. I've got my custom setup, so you know each individual has their own ability to set what they want. I've got another point and figure chart down the bottom here. So it's a quick method to review many stocks, cause and effect analysis. Thanks for watching.